Hello and welcome to Your Stocks. I'm Ashil D'Souza. With me is Sumaira Abadi. Well, as we speak, the markets are holding with good gains. At this point of time. Remember, it's been a very, very wobbly trading session. Metal stocks continue to get hit. Metal stocks, in fact, have moved to the low point of the day. The issue is, in fact, that it's a liquidity-led rally. And in the last 15 to 20 minutes odd, there is some more selling that's crept into our market. So we're holding with a gain of around 50 points odd. That suddenly quickly got sold into stocks like Mahindra & Mahindra, SBI. All those stocks are seeing big selling pressure. Now, as we speak, in fact, we're moved into the red. So clearly, we can't hold on to that 10,500 odd mark. And from higher levels, we're seeing big selling pressure. That's what's preventing us from moving higher from these levels. Hi, Sumaira.
Hi, Nigel. Good afternoon. So let's get started. First up, our top stories. Market recovers from the day's low. Key indices inch up over 0.7%, but the mid-cap index underperforms, trades in the red.
And Yes Bank continues to rise on hopes of higher capital infusion, boosts Nifty Bank, which is up close to around 0.25%.
Crude crawls up on hopes of Russia joining the supply cut talks. BPCL falls after CNBC-TV18 learns that the government will continue with LPG subsidy payment despite the privatization of BPCL.
And mutual fund data indicates that investors keep the faith in February. Equity inflow rises 42% on a month-on-month basis to come in at 11-month highs.
RBL Bank sees short covering after the bank says they have enough capital for the next 3 years. Lakshmi Vilas Bank rallies on a Network 18 exclusive that Kotak Mahindra Bank has joined the race to acquire majority stake.
Well, global markets have been volatile in trade lately as rising number of coronavirus cases have kept a lid on gains. Moreover, the price war between the Saudis and Russia after the OPEC plus meet widened the fall. So how do investors position themselves? Where is the buying opportunity? And how long will this rout continue? To take us through the interview, we have Prashant, who joins us, and Mark Mobius of Mobius Capital as well, who joins us on the phone line. Prashant.
Nigel, thanks very much. Mr. Mobius, of course, needs absolutely no introduction. Emerging markets veteran, founder of Mobius Capital Partners. Mark, thanks very much. Great to have you with us here. What is your opinion now, Mark? Does it look like we are, in the last stages of this panic, or we are very much in the middle of it?
No, I don't think we're at the last stages yet, simply because, when you have an interruption of supply chain, as you're having now, then the results of this supply chain shortage comes months later when, the earnings reports come in, the sales reports come in, etc. And the big problem in this case, in the case of the coronavirus, is that it started in China and had the biggest impact in China. And when you consider that, 70% of pharmaceutical ingredients for India come from China, 25% of car parts, et cetera, electronics and all the rest of it, then there's going to be a hit to earnings and profits for Indian companies. And, of course, some of that is already in the market, but I think not all of it. So we have to expect more earnings downgrades going forward.
Mark, there is, of course, a coronavirus, and then there is this crash we've seen in oil prices. The latter has led to serious market dislocations. Look at what has happened with U.S. bond markets, overnight funding markets in the U.S. All over the place. And that's why people have made comparisons to what we saw during the global financial crisis of 2008. Do you think, in some ways, some of these dislocations can be compared to that period, what we are seeing right now?
Some, yes, to some extent. But I would say there's no way that we will see the same kind of financial crisis, because that one was very specific to the U.S., as you know, the housing problem, and we don't see that. Of course, there have been some cases, as you know, with the Yes Bank, where some banks get into trouble because they have funding issues, but I don't think it's the same. But I do think it's very important to remember that we're in a situation where the global fear is really what is driving a lot of prices down. And it's strange, you know, I was just reading someone saying, well, the lower oil price is very bad for countries. Well, no, it's good for India, it's good for China, it's good for a number of countries. So in some ways, Saudi Arabia and Russia have stepped in and helped the rescue package for countries like India, in the sense that it's going to be less onerous for India to import fuel, and that will be good for the economy.
Mark, you said the global panic is leading to lower prices everywhere. So let's go to the big market, the S&P 500. It's lost 19% in those many days. How much more before you think, I mean, we can say, well, this is it, and things start to look a little better?
I think you're looking at maybe 3 or 4% more on the downside. I think a lot of the selling has pretty much been completed, and now people are beginning to think of maybe buying in again, which is why you're going to see from day to day some spikes up in the market because people are back in buying. But the real recovery will not come for a number of months, in my view.
Mm-hmm. What about the bond markets across tenures under 1% for the first time, Mark? And more commentators and economists in the U.S. are now saying there is a 60-70% chance that the U.S. actually does see a real recession this year. Your thoughts?
I don't think you're going to see a recession because you've got Trump there who is going to do his utmost to prevent any kind of recession. As you know, he's now talking about a wage tax cut, which can have a big impact on the economy. So I think the U.S. is in pretty good shape still, despite this situation. Now, of course, it depends on how fast the coronavirus spreads in the U.S. As you know, they've been having issues regarding testing and the supply of kits, which, by the way, is a worldwide phenomenon. I'm sure India is having the same problem. So although places like Korea have been very diligent and very intensive in their testing, other countries have not been able to do as much testing and therefore have not found as many coronavirus victims.
Talking about the virus, Mark, the one difference between, because I mean, initially people said, well, what happened in China, we will see that same thing happening elsewhere as well. But what happened in China was that, it was one province which was hugely impacted. They contained it, and it did not spread extremely widely to the rest of the country. But if you look at what's happening in Europe and the US, I mean, it's more widespread. You're finding cases practically in newer states every day, in the US, for example. So should we really expect the same kind of, bell curve kind of a pattern to how the cases rising, peaking, starting to come down as we've seen in China, or you think that's unlikely?
Well, it's unlikely. I think we're at the beginning of the bell curve. See, the big difference is that in China, the government can say today, look, everyone stay at home, and everyone stays at home. But in the U.S. and India and democracies, it's impossible to do that, almost impossible, let's put it that way, because India is a democracy, it's a free country, and so it's very difficult to restrict people in their movements and their behavior. Of course, you can encourage them to do that, and you can take certain measures, certain legal measures, but it's very difficult. So I would say that unless there is intense isolation of those people found to have the virus in the U.S. and India and so forth, then you can see the spread as great as it was in China.
Mark, are you, in a way, I mean, you're a close India watcher as well. Have you been surprised about, so far, thankfully, and I hope it remains that way, the number of cases in India have been pretty low, for the size of the country, relative to the size of the country. Any thoughts? I mean, does that come up in conversations with your peers?
Yes, it's really interesting to see that. And I think, frankly, one of the reasons, this may sound strange, but I think the Indian greeting of namaste instead of a handshake may be one factor which is very important. I think maybe namaste should be encouraged for other countries around the world instead of a handshake.
Ah, that's interesting. That's very interesting. Mark, just to get back to markets, you said 3, 4, 5% more on the S&P 500 before we hit some sort of a bottom. Your thoughts on what we are seeing in markets like India? What would your advice be to viewers who are watching?
Look out for good bargains. If you have companies on your list that have solid earnings over the long term, strong balance sheets, very important, then maybe now's the time to start bargain hunting. Would you want to be more specific, Mark, in terms of where you are seeing some opportunities? Well, the interesting now with the Yes Bank problem, there may be now opportunities in the financial sector because a lot of these stocks have been really bombed out terribly. But as you know, we're particularly interested in the consumer space, and now with oil prices lower, that will be given a boost, we believe, in India, and also companies that are bent on infrastructure supply, because I believe Mr. Modi and his party will try their very best to boost infrastructure spending at a rapid pace.
In your fund, Mark, what is the India allocation right now?
20%.
I mean, is that
so about equal to that of China?
Okay, and any plans to bump that up, or have you made any changes? Are you going to?
We'd like to increase it. It just depends on where the prices are at any point in time. So we're looking at it very carefully.
Mark, thank you very much for taking those questions. Really appreciate your time here and appreciate it. And I'd like to say namaste. As you said, one of the reasons why probably, interestingly, Mark believes that the number of cases in India are limited at this point. Thanks indeed, Mark Mobius, for joining us here on the show. Guys.
All right, thanks so much for that, Prashant. Well, our markets, we've seen a big, move in the last few minutes itself. Just pull up the last 1 hour chart, actually, of the Nifty. You'll see that we've gone from a gain of around 50, 70 points. We went into the negative terrain with a cut of around 25 points. So that's telling you the story, right? In the last few minutes, we've moved close to around 80 points on the Nifty itself. Big up move, and in fact, then suddenly a bit of a slide. Let's slip into a short break. You come back, we'll focus on the markets, and we'll also answer some of your queries. Stay with us.